Hey guys, Mike here. So I got another jam-packed video for you, and boy, we had some big earnings come out, and Nvidia, which we're going to get into, boy, it just roared today, double digits. When you don't think it can go any higher, there it goes. And I'm going to show you the trick they used on the conference call to make that happen, plus what also came out this morning to help drive it up. And we'll look at the chart, something you better mark on your charts because it's going to happen. I can tell you that right now. But, you know, we had a bunch of economic news come out as well. I mean, there's a reason why the market was like up, down, like a seesaw, right? And the first one right out the gates, I mean, U.S. mortgage applications, Lord have mercy. These things have just fallen off a cliff. And we hadn't seen this level since 1995. And what's even crazier, though, is when you look at the bottom part of this, look right there. This is the average contract rate on 30-year fixed mortgages currently. And obviously, if we just kind of draw a straight line and you say, look at that right there, how much higher it is going all the way back to 2010. But then if you go back farther than that, you have to go back to 07 to get rates this high. And you can see for the last 3 weeks, they've been going up. And you see a 30-year fixed mortgage as of today, 6.778. And so, again, heading back towards 7, which means you should, at some point in time, see financial conditionings tightening. Remember, they loosened up and everything when Jerome Powell and them kind of just let the market run wild. And, you know, I've been tracking this right here. This is something me and some of the members are actually tracking. There's a bunch of these different charts, but here's one of them. And this is net percentage of domestic banks tightening standards to us, the consumer loans, credit cards and stuff. And you can see it's going way up. This is updated every quarter. That was 2020. This was the 08 financial crisis. You can see how much it went up. You can see how much we've gone up already, even though we had a much lower starting point. And you can see during the dot-com bubble, I mean, you saw hardly any increase. But this is a way to take liquidity out of the market because what is it doing? It means we have less loans to buy houses, cars, boats, motorcycles, you name it, right? Less credit card, which I don't understand the credit card part because it says it's tightening, but I mean, we got a record amount of credit cards out there and a record amount of credit card debt happening right now. But this is another form, and there's other charts that show the tightening on the obviously commercial side from the businesses, from the small, medium, and even large businesses. And guess what? Here's a hint. It's tightening a great deal. Okay, now how long this is going to take effect into the economy? I think you're already seeing it. I think that's why I showed you, if you've been watching long enough, what was it, last week, the week before, the amount of bankruptcies to start 2023 we hadn't seen since the financial crisis. There's a reason for that. Those bankruptcies are happening because through this 13 years, and trust me, that number's going to get way higher. Through the 13 years of Papa Powell and them basically taking over the market, what have they created? A bunch of zombie companies, a bunch of companies that are unprofitable, debt-ridden, and now they're in this environment now where they're sitting with all this debt on their books that they're going to have to refinance and new debt they're going to have to take out at these kind of rates. Well, if you're a bank, would you want to loan those companies, keep loaning those companies money now that's higher rates or even refinance that debt? No. So what do they have to do? And bankruptcy. That's what happens, right? Only the strong will survive, so to speak. And so that's why, and plus with consumers, you've seen the amount of debt we're taking out. Well, the more debt you take out, your debt to income ratio gets higher and higher. The bank says, you're not a good bet. You're just not a good bet, right? And so that's why you have seen delinquencies tick up and stuff. And so I continue to see that. And it's funny, we actually got the consumer sentiment numbers out today. And it's so funny what a week makes, but I already know what the numbers are before they come out. You know how I know this? All you got to do, and you can do this if you ever get bored, YouTube finance channels, we all know it, right? We're all in this business. We know when the views go down for the videos, we know the stock market's going down. When the views go up, the stock market's going up. Like my wife said, oh, the views in your videos went up. I said, don't worry, the stock market's going up. They'll come right back down when the stock market goes down. And that's what happens. That's just the way it is, right? The content don't change. But people's mood changes, right? And a lot of people, you get your people who will watch you, you know, religiously, same way people will follow the stock market religiously, and then you get those ones that bounce in and out. When it's good times, they're in the stock market. When it's bad times, like, whoop, don't want anything to do with it, right? And they won't buy on the way down, they'll buy on the way up. That's what I'm talking about. But then you can see it, and look right here. I mean, this is a big drop. You can see right there, boy. The Bears went from 28.8% since the 15th, all the way up to almost 39%. What a change that was. And this right here came out, and I want you to look at this carefully. This says, now you would think that there's a lot of people shorting the S&P, right? And this right here says only a few are betting against the stocks and the S&P. And when you look, that's where we're at right now, and you can kind of draw a line and say, well, That's not much higher than, I mean, if you got 2012 and 2015, it was way up there. But you're telling me we've been crashing down this far, and you see how high it's gotten just total? Look at the '08 side of this. How many people were short in the S&P? A whole lot more. But the thing is, what stocks have really been going up, like getting the huge gains, right? It's been the stocks from the NASDAQ, right? The QQQ. That's the stocks that have been going up. It's been stocks from IWM, right? The small caps. Those are the ones that have been going up 100, 200, 300%, right? I mean, you got your big stuff to show you where we put our money. And so I think it's important to understand who's betting against the S&P. Remember, the S&P has oil stocks, travel stock, bank stocks, all these different things. But it's the Qs or the risky stuff that's been flying since, you know, December started running up, and in January, right? That's what's really been running up. So I wasn't surprised when I seen that. Let me know in the comments if you were. I didn't think they were really shorting the S&P per se. And if you want to know where our money been going, because remember, retail's been putting on average $1.5 billion a day using margin and everything else. This right here will tell you the top 10 stocks we've been putting our money into. And I told you, number one is Tesla. No ifs, ands, or buts about that. It's not even close, right? Number two, been spying the S&P 500 ETF, the SPY, right? Number three, if we follow this, because it don't go in any certain order, Amazon. That one actually surprised me. I was surprised it was ahead of all these other ones. 4 is Apple. 5, all the way in the left corner, is Nvidia. You would think that would be like number 3, right? And then you got 6 is going to be the QQQ ETF. Then we go to Alphabet, which is Google. AMD, I was kind of surprised to see that one on here, but it is. It's number 8, ahead of Meta, believe it or not. You know, Meta's had a huge run. You got Meta number 9, and then number 10 is Microsoft, right? And guys, if you're getting anything out of this, please hit that like button. It really does help the channel. And if you're new here and you like this kind of content, think about hitting the subscribe button. I really appreciate it. And for the Kathy Wood fans, ARK invested number 27 of retail investors. So, I mean, people were piling in there. That's the reason why it went sky high, and a lot of the stocks in it as well. I mean, Tesla's still their biggest holding as far as I'm remember. But now, looking at the chart and stuff, and I'm not even going to S&P. We know what's going on with S&P, but the Qs, this is the one to watch because this is the one under the most attack right now because of the stocks that have ran up, right? And I put this chart to the members last night, and you can see right here, what did it reject off of in February? The 2022 year-to-date Anchor VWAP, right? And I've been playing around with these. Again, if you don't know what an Anchor VWAP is, do some research on it. It's a pretty powerful tool, and it's becoming more and more popular. Well, you can see, where's it heading down to, right? We're getting in this chop box. We've been in since all the way going back to September, and it's sitting right above the 200 SMA and the 2023 year-to-date Anchor VWAP. And of course, what are bulls saying? Because if that breaks, obviously, you know, yeah, you're probably heading down, what is that, like 260, 265 to the bottom of the chop box, you can see. And so again, that'll put the RSI below 50. And so they're trying to hold that line right there. And I'll show you a few more of these. But Nvidia, here you got Nvidia. Already has a golden cross this month, and then look what's happening now. You're having the 100 crossing over the 200 as well. So, you know, super bullish. I mean, massive run up, unbelievable run up, by the way. And again, MACD is turning back up. But if you look at it, look at this gap. I mean, Lord, 14%. I'm telling you, as I told the members, mark that right there because this gap will fill. I'm telling you, if this gap don't fill this year, I will be stunned. That gap is going to fill. I'm just betting on it for sure. But mark your alerts because all those other stocks, Roblox, Trade Desk, all these other stocks that did these huge gap ups during earnings beginning of the week and last week, what are you seeing happening? They're filling those gaps, right? And I mean, because when you get an enormous, a small gap's one thing. Those kind of big gaps, yeah, you can guarantee the algorithms are hunting those, right? Like Meta had that huge gap. Now it's starting to come down to fill it. The only thing holding it up, which I'll show you in a minute, is a certain something. But the other thing, which I put in the Discord this morning, was pumping Nvidia. Look at all of these upgrades. Goldman, JP Morgan, Morgan Stanley, Bank of America, all upgrade their price targets. And what does that do to the stock? Sends it up, right? And when you don't think the run can get any more, I think, don't quote me on this, I'm not looking the deal, but I was like, I think Nvidia is actually trading, is at 19 times sales now. I mean, that's just amazing. To give you an idea, I mean, Tesla, you know, everybody complains about their valuation, but, you know, it's in obviously a different sector, but it's at 7, right? If you go back to the same sector as Nvidia, and this is me looking last night, AMD is 5 times sales, TSM, I think, is 5 times sales, and then ON, which is a new semiconductor company, I believe. It came public maybe 3 years ago, whatever. But that's like 4 times sales. I mean, it's like it's unbelievable. Like 19 times. Like it's like nosebleed, right? But you know what they did? Here's what they did. They said the word AI 75 times on earning calls. 75 times, more than anybody else. That's like they knew it. They're like, just keep saying AI, because what's been pumping? AI stocks. We're on this craze, like, ooh, you know, and it's something to do with AI. It's like AI 75 times. And so that helped them. You know, that'll do it. You know, eventually the AI bubble will burst too. Maybe become this huge bubble like everything else, right? And speaking of Tesla, you know, this one right here, again, I told you, people think it's going to be easy to push this thing down. And you can see what's happened the last 3 days. Sold off in the morning and recovered, right? Closed the gap perfectly, right? That trend line still in place, right? And until that breaks, I mean, we ain't talking nothing, right? I mean, until that trend line breaks, it don't matter. I mean, you can keep telling it going down all you want. Now, if it breaks, obviously, yes, then you're talking about 180s on the cards here, and we'll start talking. But and not until that breaks, okay? And then, of course, you go to Meta. You're sitting here. Here's what's holding them up. This right here, right there, see what's holding it up? That right there is the 2022 Anchor VWAP. It is sitting right there, and you can go on a smaller time frame for it to show how powerful this is. Look at it. Just bouncing, right? Since the 17th, just bouncing. It just won't break. That is what's really holding us up, besides the news, of course, that, you know, somebody said they actually denied and laid off employees. But that is technically what is holding us up. And this right here is the 2023 Anchor VWAP, right around the 160 area. And so we'll have to see if it finally breaks, which, you know, a lot of people are trying to push this down. They want to get that gap fill, right? A lot of people got puts in this, which makes sense, you know, what to see. And then plus with the market obviously starting to trend downwards with a lot of support levels being tested, yeah, I mean, it would make sense, right? I mean, but I'll tell you, and I've said it before, I'll say it again, it just look for gaps, especially big gaps. I mean, look at Roblox. I think Roblox has gave back almost all its gains since its earnings, hadn't it? If I'm not mistaken. And so, and a lot of them have done that. You know, I said, watch out for DraftKings. Gambling stocks are hot right now, but it left a big gap behind. You know, and if the market starts trending down, they're all filling. There's a reason why 90% of gaps fill, because those gaps mostly get filled when you start having these huge moves down or huge moves up. Right? It goes both ways. And so, yes, when the market's turning up, what did we talk about with it was Meta and Netflix? Watch those gaps. Watch those gaps, because the algos, the big boys, do the same thing. They beat it down to nothing. It gets oversold using the monthly or the weekly, and then there'll be a big gap above, and that is the target. If you look at any of those charts, God knows I've studied them, what did Netflix do? Filled that first big gap, then sold off, right? And started moving up towards the second big gap. And then when they had their money, they rolled into Meta. They rolled into Meta and started filling those huge gaps they had on the earnings calls. Started filling those up. Fill it up, sell it off, move up to the next gap. It's kind of like this, just a cycle is what happens, right? So, you know, we learn something every day, right? That's the key. So watch out for that. And tomorrow's Friday. Obviously, got weekly options expiring. There are a lot of puts out there. We'll see if they finally let it move down through this, and we'll have to see if the Qs can get out of the chop box. Right now, the bulls, they got a hold. That's just the way it is. But most bets will start moving towards the downside because of yields going up, even though the dollar looks like it's about to top out, maybe. But again, the market is like, okay, I thought we were going to have this pause. Maybe we're not going to have this pause. I don't know what to believe. But understand this, even if we go back down, try to turn lows, I mean, just look at it simple. You just get to add, you know, more shares of stocks you love, or just sit there and hold. But the other thing is, we're going to have many of these rallies where it's like the market anticipating a pause. Okay, that's what you got to understand. Anticipating pause. I'm working on a more detailed video with even some more stuff in there on this pause and everything for you guys. But I'm doing a little research I want to get verified first before I put it out. And also understand there's one phrase you're hearing that I've never heard before. And now all of a sudden you're hearing it for the last 3 months. I even said it the other day. People are saying, I'm talking about fund managers who've been around a while. I just bought my first treasury the other day. Heard somebody say it on TV. I just told you guys I bought my first treasury back in December, right? And so it's so easy to do. And they're so high. And so people are saying, look, if these rates keep going up and you get to a point, if we do go, say, 550, 575, somewhere in there, and all of a sudden you're telling, especially people with a lot of money, you can basically buy treasuries for 575, and God forbid we get to 6, and get 2/3 of what you can get on a regular S&P return with no risk, basically as risk-free as you can get, right? Investing in the United States government, then they're going to do it. And that's what people are doing. There are droves rolling in there right now. That's the other thing. How is it going to affect the stock market? That's what I've been asking for months. Like, if there's another alternative, and we got to all-time highs when there was no other alternative, and all of a sudden you bring in a big alternative, right? And of course, people 55 and older, really, that's probably the number one question I get. If I'm getting close to retirement, should I buy treasuries? And I can't give you financial advice, but I think you know what I'm going to say or want to say. It's like, why would you not? I mean, if it's as risk-free as you can get, nothing is totally risk-free. But again, I always say if the government defaults on their debt, trust me, you got way bigger problems than the money you just lost in that treasury. Because your 401k and IRAs are toast. Okay, and so that's a big thing. But yes, if the big money, and you can't have a bull market and a huge, rally and that without big money rolling in. The retail, we don't have enough money to do that, right? But if big money's having this alternative, going, man, these yields keep going higher, more money is going to continue to flow. It's already flowing, right? And so if that's not going to the stock market, that's a whole different problem. On top of all the economic stuff. Right? I mean, let's be real about it. So anyway, that's a lot. I'll save a lot of that for another video, but just want to put that out there. Appreciate you guys watching. Always appreciate your support. Hit the like and subscribe button. Share the video if you can. And I'll see you tomorrow.